Yes, so we think the conflict in the Ukraine is exacerbating the trends that we were already seeing before. In actual fact, really the Ukraine conflict is going to, I think, number one, drive commodity prices even higher, i.e. drive inflation higher. I'm talking about wheat, for instance, I'm talking about oil, gas. And in addition to that, you're probably also going to see increased defense spending. Both of those are going to drive inflation. And we're also going to see slightly slower GDP growth. What is the impact of that in the overall macroeconomy? Well, I think the ECB is going to raise rates faster than people were thinking, and is going to finish with quantitative easing and start quantitative tightening maybe as early as the next few months. What is our investment strategy? We're very, very bullish on the European banks because they're very sensitive to higher interest rates. To give you some perspective, 100 basis points higher interest rates mean that you get a boost in EPS by around 25%. Yes, there are two sectors in the US that benefit most from higher interest rates. One, US banks. US banks really benefit from higher interest rates on the back of better margins, and the margins really are achieved. The better margins are achieved by better deposit spreads. And to give you some perspective, for every 100 basis points increase in interest rates, you tend to get EPS going up by around 25%. The other sector that benefits is US life insurance companies, and they benefit from higher interest rates at the long end of the curve, and most of that really driven by better returns on investment portfolios. The fact that out of the money liabilities all of a sudden become less costly. And then thirdly, the fact that life insurance sales just tend to do a lot better in a higher interest rate environment. As a result of that, we are overweight both US banks as well as US life insurance companies. Yes, so payments remains a great opportunity. I think the industry will continue to grow revenue at above market levels, really driven by two factors. One, the fact that you have digitalization of cash continuing, and two, the fact that these companies are gaining share from the incumbents, which are the regional banks. And when you put those two together, combined with a little bit of operating leverage, you should really drive 15 to 20% earnings growth over the foreseeable future. The other area that we're excited about is digital banking. Again, similar dynamics to what we just talked about, but with better customer journeys, efficiency and profitability improvements, which really should drive market share gains. Lastly, we're very excited about the blockchain. It has the potential to revolutionize financial services across a variety of areas, including smart contracts, DeFi, NFTs, cross-border payments, and securities trading.
投资一定有风险，基金投资有赚有赔，申购前应详阅投资人须知或公开说明书。